Istanbul, a city of more than 15 million people, appears deserted. It's under lockdown along with many other cities in Turkey to limit the spread of COVID-19. But that's straining businesses. On Wednesday, the central bank provided them some relief by cutting the benchmark interest rate by 100 basis points, a move which it says is in line with the actions of its international peers.
As developments regarding the spread of the coronavirus substantially weaken global growth outlook, central banks in advanced and emerging economies continue to take expansionary measures.
That means borrowing costs in Turkey are now lower than the rate of inflation. But with international oil prices at historic lows and global trade slowing down, the bank says domestic prices won't spiral higher. Analysts had expected a reduction of 50 basis points, so the size of the cut came as a surprise. It's the 8th time the central bank has slashed the rate in less than a year, and borrowing costs are now just a fraction of the 24% high reached in September 2018. But the relief for domestic borrowers comes at a cost. It's putting pressure on the value of the Turkish lira against the dollar and driving up the cost of imports. Ankara is aiming for a gradual reopening of the economy from late May.
We have started to flatten the curve. We aim to achieve maximum observance of lockdown measures during Ramadan and, God willing, begin a transition to normal life for our country after that.
Once that happens, businesses will be eager to resume exports and welcome tourists again. The government is hoping those boosts will help rebuild foreign currency reserves and stabilize the local currency. Mobin Nasir, TRT World.
Well, for more on this, economist and financial columnist Taha Arvas joins us live now from here in Istanbul. Good to have you back on the program, Taha. Now, as we know, this is the 8th interest rate cut in less than a year. Tell us more about why the Turkish Central Bank thought it was a good time to reduce rates once again.
Well, normally the central bank follows these interest rate cuts after inflation decreases, and this is a period this is an uncharted territory here where we have we have a massive decrease in inflation if the initial digits or numbers are any indication. I believe the IMF said that they expect Turkey's inflation to decrease by 3 to 4 points. I would be surprised if they didn't decrease by much more than that. I think the biggest threat now is deflation in the world. And so the central bank did what many other central banks, almost all other central banks have done, and decreased the cost of borrowing here.
Yes, it is interesting, isn't it? Because as we know, the Turkish government has been trying its best to really reduce the inflation rate. So do you think this might be the event that finally manages to bring it down dramatically?
Yeah, absolutely. I think the coronavirus will definitely decrease inflation, both in Turkey and around the world. And like I said, a lot of countries are in dire search of decreasing. They were in dire search of increasing inflation. And now that when the coronavirus has come along, Europe and Japan, who have long sought inflation, and the United States, are facing deflationary periods. So yes, in short, I think Turkey's inflation will slow considerably here, especially as a lot of the costs of production, the input costs have decreased as well.
Now, in its latest global economic outlook, the International Monetary Fund forecast sharp contractions for much of the world's economies, including Turkey. So the IMF saying that the economy here will fall by 5% in 2020. How does this line up with other emerging economies?
I looked over those numbers, and I think Turkey is one of the best out of all those countries that we're talking about. I mean, they expect 8, 9, and double digits percent decreases in growth for much of Europe. Russia, I believe, is 5.5%. South Africa is over 6.5%. Brazil. All Turkey's peers in the emerging markets are doing worse, it appears, than Turkey. And this is largely due to the younger population, the growth rates in Turkey, and that's good news.
As we know, governments around the world have been desperately trying to dole out stimulus measures in order to mitigate the economic impact of this outbreak. What measures has the Turkish government announced in order to do that, and what more do you think they should do?
Well, initially, right after I think we realized the coronavirus was a lot more serious than everyone else than people had expected, and we're talking about February here and March. The central bank decreased reserve ratios, which allowed banks to lend more easily. It also set up its own stimulus packages, and it set up a multi-billion-dollar loan program for companies to borrow during this period, because a lot of companies are very much cash strapped. So those are the measures that it took, and obviously the Fed has taken similar measures, and then they realized it wasn't enough, and they've taken new measures. So we'll see if the central bank and the Treasury do that in Turkey as well.
Now, Ramadan begins on Friday for the Muslim world, and the Turkish President Recep Tayyip Erdogan has expressed his hope that after the month-long period, perhaps some normalcy might return to the economy here. Do you share the same hope and expectation?
I share the same hope. As far as expectations goes, I mean, I just listened a moment ago to President Trump talking about opening up U.S. national parks, and many southern states have already begun to push for opening up states. So around the world, there is an anxiety over long-term shutting down of the economies of countries. Obviously, there's a health concern here, and no one wants to open up too early. But at the same time, there is a major economic cost every day that countries remain in self-isolation and and when people are staying at home. So yes, I share his goals and aspirational goals, but I also I would be hesitant to say that that's a hard reopening date.
Okay, Taha Arvas in Istanbul. A pleasure as always. Thank you.